Hello, good morning. My name is Alex Yao. I'm with RE/MAX in Kerrisdale. And
I'm Chris Cornborough, Senior Mortgage Consultant at Forefront Mortgages.
Perfect. Today we wanted to talk a little bit about the market. I know we are kind of in the there's a lot of question marks in regards to what the economy is doing, how it's affecting the market, and the coronavirus that's been out recently. They're all kind of tied together. So, Chris, you wanted to start about
rates? The coronavirus has been interesting. We've seen fixed rates and variable rates come down a fair bit. Prime rate dropped last week by 0.5%, which is pretty unprecedented. It's the biggest single drop since the 2008 economic crisis, so it's kind of a big deal. The benefit to home buyers is obviously much cheaper mortgages, almost 1% cheaper from this time last year. How are you finding things in the market right now?
Well, last year was just a free fall, essentially, in the market, relatively speaking. Ever since last September, I want to say, September, October, that's when things started picking up. And even now, I mean, we are seeing upward tick on the market averages.
So you probably for like first-time home buyers, like on the lower end of the market?
Yeah, so that's the interesting part. The media, the reports, all of those things are suggesting that overall the market's picking up. But if you look at it closely, if you look at all the different market segments and price segments, you're seeing the entry level of each category. For example, entry level condos, entry level houses, under 1.5, for example. These are the markets that's really been picking up. These are affecting everything else. I mean, if you're selling a $10 million house, it's probably not moving as quickly as all the other ones, but it's the kind of the lower priced market that's really picking everything up.
We're seeing that on our side from first-time home buyers getting into bidding wars again, and even on houses $1.5–2 million on the west side. Still multiple offers, no subjects. It's kind of back to the old days. And not the good old days maybe either, but the old days.
Yeah, it's really interesting because I think it's because remember the mortgage stress test when it first came out? So that essentially just cut down the bottom 20% of all the buyers. They just couldn't buy what they wanted anymore, right? So now that we see the kind of market average prices that came down, probably around 18% or so far.
That's 18% from the height of the market?
From the peak of the market,
the prices are down around
So and that's the average, right? So now we're seeing that these buyers that couldn't get a mortgage before are now qualified for kind of what they were looking at.
Yeah, absolutely. Well, it's funny because in terms of mortgage rates and the new stress test that comes into effect in April, where the stress test is actually reduced, along with low mortgage rates, that's probably an 18 or 20% bump in what people can afford.
Oh, totally.
Just from the low rate.
Totally.
Right? Going from 3.25% to say 2.25%. It's a big deal for people.
Oh, for sure. And you know how it is. Traditionally, you get the higher priced market kind of leading the lowest priced market, right? And so the houses always go up first, and then the townhouses, the condos, and then they reverse. So it's interesting that the kind of lower price range is kind of leading the market right now. So it'll be interesting to see kind of what the trigger effect is afterwards, a domino effect.
Yeah, because we've seen a lot of buyers that were pre-approved 2018, 2019, and I think they just lost patience with the market.
Right.
They just said, forget it, I'm going to rent. It's too stressful. Prices came down, and now all those people are kind of coming back.
Oh, totally.
We've got more kind of re-approvals in the last little while here than we've had the last year or so, just because people are now there's a sense of urgency. Rates are kind of low, prices are low. Maybe people are thinking this isn't going to last forever. That seems to be the mentality from our clients.
And I think that's very true. And even from my clients as well. I mean, they are gearing up now a lot more than last year. And they're a lot more active in the market, whether they're buying or selling. But I put out this monthly newsletter to my clients, and so if you want to subscribe, go to www.yaorealestate.com, YAOREALESTATE.com. Just sign up, and you'll get these monthly newsletters. So in that, I describe kind of how the market's behaving on a month-to-month basis compared to the previous months. So all these investors that are kind of looking at the lower priced markets for cash flow, they're all coming back as well.
Are you seeing a lot of that now from, like, the things actually cash flow with prices coming down and rates probably coming down as well?
Yeah.
It's probably more economical for folks to buy a rental property?
Yeah, I think a lot of people are kind of scared over the last 2 years or so. The capital gains that people are used to getting are not there anymore.
Totally.
And so what's the next best thing, right? They want cash flow.
Yeah.
So that's kind of what they're looking at now.
Yeah. Alex, thanks so much for joining me today.
Thank you, Chris.
And we covered off a lot of things.
We did.
Pre-approvals, the state of the market, the stress test. For anybody watching these videos, reach out to Alex and myself. Our contact info will be in the video at the end, and we'll go from there.
Perfect. Thanks for having me, Chris.
Thanks.